Rachel Reeves has been under pressure for the last week or so as the cost of borrowing on bond markets and the value of the pound have gone against the UK, but without any data to cause this negative sentiment. Well, today we've got the first of some important economic data we'll see this week, and it's inflation numbers. CPI inflation, consumer price inflation, that's the blue line. You can see it climbed that mountain up to more than 11% after the Ukraine war. The target is the red line, the Bank of England's 2% target. Got below it briefly in September. Where did we get to today? We got to 2.5% in the year to December, lower than the November figure and crucially lower than expected, so a little surprise. And the underlying numbers are even more positive. We've turned that line into a bar chart, and you can see it, 2.6 down to 2.5%. And here are some of the components. Goods inflation increased a bit. These are the important ones as far as the Bank of England is concerned. Services, 80% of the UK economy was 5%. Big chunk out, 4.4%. Again, more than was expected. And core inflation, this is perhaps the most important of these numbers. If you strip out volatile elements like food and fuel, which rise and fall on commodity markets, it fell to 3.2% from 3.5%. Now, these two matter because the bank has said while it wants to cut interest rates, it wants to see movement in these underlying numbers. They're, if you like, the sticky inflation that was left in the British economy when that huge peak of 11% receded, which was caused by international factors. Now, the bank will meet in February to decide interest rates. Where are we today? We see rates climbed up as inflation rose, 5.25%. We've had two cuts. This was what people thought before the budget would be the path of that cutting cycle. Perhaps 4 rate cuts in the next year, down to below 4%. Since the budget, not such a pretty picture. Inflation staying higher for longer, in part because Rachel Reeves's measures in that budget are considered inflationary. But the markets this morning are betting that there is an 80% chance now there will be a rate cut at the next Bank of England meeting. Good news for borrowers, and that's an increase from 60% before these inflation numbers came out. So they will be impactful. Now, how long it will last remains to be seen. Most forecasts are that inflation will rise again as we get into the spring, in part because of the budget. And Donald Trump is about to be inaugurated. Most of his policies are considered inflationary. So some good news for now for the Chancellor. How long it lasts is another matter.